Uber shareholders are completely fucked. Buying shares of Uber is like buying BlackBerry before the iPhone. It's like buying Blockbuster before Netflix. If you're stepping in and buying shares of Uber on the dip, you need to watch this video. You need to understand the company's business model, because on today's video, I'm going to show you, and it's become apparent to me, how many shareholders of Uber actually don't understand the business model and what is Uber's actual moat around their business and how that moat is about to get disrupted in a major way. Just like BlackBerry was disrupted by the iPhone, just like Blockbuster Video was disrupted by Netflix, Uber's business is about to be disrupted in the exact same way. And if you're stepping in and buying the dip on Uber, I'm going to not feel sorry for you, because you have been fair warned. What is going on, investors? Hopefully you guys are doing well out there. If you've owned Uber shares for a while, they've actually not really done that well over the past 5 years, up 75%, but over the past year down about 6%. That's not that great considering you're buying Uber for performance. And there's been plenty of other stocks, certainly over the past 5 years, that are up way more than 75%. The company announced Q4 earnings. We'll get into them. And what's interesting about Uber is there's a lot of investors focused on Q4. They're focused on Q1, but this is exactly like focusing on BlackBerry's earnings in 2007, maybe even 2008 after the iPhone released. Things were still pretty good over at BlackBerry. Nokia was still selling phones, but their business model was basically completely blown up, and it was only a matter of time. When we go through Uber, we are going to see how fragile this business is financially. There's a lot of people saying, wow, they make so much cash flow, and Uber is such a great business model. No, it's not. You can just open up these financials and see how fragile this company is from a financial perspective. When I read through the conference call, you could see the panic. There is panic going on over at Uber. And it all relates to the company's business model and the moat around their business, because the executives over at Uber understand this. And the reason why they don't talk about it on a conference call is because they don't want the average shareholder to know this stuff. Okay, so Uber's business model is actually very simple to understand. It is a two-way marketplace. Okay, there's other examples of two-way marketplaces out there. eBay is a very good example as well. What does eBay need to exist? They need sellers on the site selling goods, and they need buyers buying those goods. If one or the other on eBay dries up, let's assume that the sellers all decide, I'm sick of eBay fees, I'm going to go sell somewhere else. Well, guess what also will dry up over at eBay? All the buyers, because there'll be nothing to buy. And the same is true if the other way of that marketplace goes away. So there's a ton of sellers on eBay. What if the buyers dry up? They decide to go somewhere else. They're sick of eBay, sick of customer service. Well, eventually all the sellers will drive up. Uber is the exact same thing. It is a two-way marketplace. They rely on riders, who then rely on there being an availability of drivers. And the key thing about the drivers on Uber's marketplace is they need an incentive to drive, okay? They need payment. They need money in order to be incentivized to drive. Obviously, none of these people are going to work for free, which we'll talk about here in a moment, but they need an incentive to drive. And if the drivers dry up on Uber, well, then the riders would go away and vice versa. And this is Uber's moat, the fact that they have a balance of both drivers and riders, very similar to eBay, very similar even to social media sites as well. You need an audience, but you also need something for the audience to view, content. One or the other goes away and the moat goes away. It is also evident here on YouTube. If people stopped posting videos on YouTube, eventually YouTube's moat and their business model would dry up. Uber's moat is this two-way relationship, this two-way marketplace. And two-way marketplace is not something that I make up. This is well studied in financial universe. If you don't know what a two-way marketplace is, do 30 minutes of internet research, and you're going to come to realize that this is Uber's business model. Now, how is the autonomous car marketplace going to work? Well, I've got news for you. It's not going to be a two-way marketplace. That is because an autonomous vehicle does not need an incentive to drive. You don't need to incentivize an autonomous car to get off the couch and go drive for Uber. You don't need to incentivize it with more money in order for it to drive. You don't need to incentivize an autonomous vehicle at all to do its job. So an autonomous car marketplace really just needs riders. And so it turns into a one-way marketplace. And yes, Uber does have part of this moat. But those of you out there that don't think that companies like Google, who literally dominate online advertising and have a user base far bigger than Uber's, also companies like Tesla that have proven themselves time and time again across a large swath of industries. And not only that, the owner of Tesla owns one of the largest social media sites. Attracting a one-way relationship where you're only attracting riders is far, far easier to compete with Uber. In this business model, it actually is difficult to compete with Uber. You would not only need to go attract riders, but you would also have to extract the drivers away from Uber as well. This is difficult for a company even like Google, even like Tesla, to come in here and compete with this. But in an autonomous car marketplace, where you have cars that don't need an incentive to drive, you would only need to attract the riders. And you can attract them with coupons, with cheaper rides, with incentives, with all types of things. We've seen this time and time again with social media. There is an incentive to have a Facebook account. And then a flashy new app like Snapchat or TikTok or one of these other ones comes along, and people no longer have the incentive to post and use Facebook as much. Same is going to be true with Uber. Riders have an incentive to use Uber because it is the best two-way marketplace. When it becomes a one-way marketplace, the incentive starts to crumble. Once you understand this, you are going to see that Uber's business model is also going to begin to crumble. This is like the sellers leaving eBay. This is like the buyers leaving Amazon. Eventually, the entire model starts to clap. We are seeing some cracks in Uber's gross booking number. In the upcoming Q1, gross booking expected to be between 17 and 21%. In the current quarter, it was about 18% year over year. So they're guiding to maybe close to a midpoint there. Overall, the company's business is actually relatively solid, growing again at about 18% clip. In constant currency, revenue ticked up by about 21%. When you look across the company's different business models, it all paints a story. It's all growing in kind of that 18 to 20% range, depending on if you're factoring constant currency or not, which I think you can assume that you can. When you look at revenue, the company's take rate continues to be very, very strong. None of this is a problem. In fact, if you're arguing this, I would just say it's because you don't understand the shift that is about to happen. From a balance sheet perspective, the company actually doesn't look all that great. We've got about $6 billion in cash, another $1 billion in short-term investments. You've got some receivables, but you also have some long-term debt here as well, sitting about $8 billion. They've trimmed that down a little bit. You also have those insurance reserves. It's far more expensive to insure somebody's life than just a autonomous vehicle. You will still need insurance when you're driving humans around, but there'll be one less human that you actually have to insure. You also have human error that you have to insure, which we would assume when autonomous vehicles get perfected, you won't have to insure against that error rate as much. Now, company doesn't generate a massive amount of income from operations. Off of this $11.9 billion worth of revenue, they got all these costs. They have to share money with the rider or with the drivers. You printed just $770 million of income from operations, 2.8 for the full year. And again, I have to remind you, we've got a valuation of this one sitting close to $150 billion. These are not impressive numbers. Yes, if you factor in that if the moat maintains itself and you can grow 18 to 19% out into infinity, well, eventually the company certainly grows into its valuation. And this is where the bull case comes from. They just assume that Uber's moat will maintain, just like BlackBerry investors and Blockbuster investors at one time assumed that that moat would remain. But nobody in the bull case is actually factoring this in, that it turns into a one-way relationship and a one-way attraction. It's much, much easier for a new startup app to come along, especially from Google and Tesla, which have plenty of cash. In fact, they have more cash and more profits than Uber does, particularly when we're talking about Google. These companies can attract riders. That is not going to be a problem. In the case of both of those companies, they're also going to be supplying the cars as well. And so they are going to be in a great position. And those of you that think, oh, Uber's going to sit in the middle of those two companies, neither of those companies want a middleman. Google and Tesla are not going to want a middleman sitting in the middle of a relationship earning a commission, especially when the business is at scale. Uber does not offer anything that either of those companies can't do on their own. They are developing the cars themselves, and they'll be able to attract the riders themselves. They will not need Uber. Uber is not wildly profitable at the current time, and that's a problem. Flow down to cash flow. This is what people always say. Oh, Uber makes all this cash flow. Yeah, for the current quarter, $1.7 billion. For the full year, $7 billion. This is absolutely fantastic operating cash flow. And if the business model is not disrupted, well, this is absolutely fantastic. And they'll be able to continue on into infinity, and this will grow to a big business. But I just don't see that happening. Shares are under pressure. Technically, you are in an uptrend on this one. You are approaching the middle of the channels. These are areas where if for whatever reason you believe that Google and Tesla in fact, Tesla's entire business model is to eliminate the middleman. So if you think that Tesla's entire history of the company is to literally get rid of the dealer, get rid of all the middleman when it comes to charging and all this stuff, Tesla gets rid of the middleman. In fact, I think they're refining their own lithium at this point. If you think that, oh, they're going to launch autonomous vehicles and then put a middleman in that business model, yeah, right. And if you think Google, who's sitting on like $100 billion in cash and, has a business model printing $125 billion of operating cash flow, also needs a middleman. Yes, Waymo is partnering with Uber, but that's just to get to scale. Once Waymo gets to scale, they will kick Uber to the curb. Very similar to how Apple has kicked Intel to the curb. They reached a certain scale when it comes to personal computers and those types of things. They didn't need them anymore. They developed their own chips. Time and time again, we've seen this in technology. These companies partner in the early days, and then they kick the middleman to the curb once the scale is reached. That is the realization that investors will have about Uber. Don't say that I didn't warn you. This is not a stock that I would want to be in. In the shorter term, it might go up or down, but in the longer term, once this relationship plays out, their moat goes away, and this turns into the next blockbuster video or BlackBerry cell phone. Hopefully you guys enjoyed today's video. We'll see you again soon. Good luck with your investments.